The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show in sunny the Philippines here. Hope you guys are having a good morning in the States. Well, tell you what, we got to take a look at oil. Showing the video again, I hope you don't mind. And let's take a look at the February contract. Actually, the January contract, excuse me. So, again, you know, you guys probably have not been living in a cave. And what is going on this morning with the OPEC situation, talking about tightening supplies. Everybody getting together finally, and looky what's happened here. Talked about not shorting oil against this 52.14 last week. It just didn't, you know, technically look like we were in a reversal situation on the top of this long-term profile. And, you know, when you had the daily sitting at the same space, 52.42, open up last night for you guys, this morning for folks here, and just started running past the breakout stage, 52.42 being the top of the profile on the daily. You got really some signs of decent news well before. I'm going to pull up our scanner really quick, go into the Saudi Arabian Stock Exchange, and I'm going to go into our, man, look at this sea of green here. So you got to wonder if some people are going to start taking profits on this. But if you go back, you know, back into the, you know, 1st of October, this thing started bottoming out, and I'm going to go to our weekly. That was that 1st of October area that we just spoke of, bottoming out, and that was before oil really started getting some legs. So somebody knew something here. And as we look at oil, do you short this thing now? I don't think you by any means start shorting oil at this stage. You got a profile appearing below price action on the 240s here. You're doing a breakout. There are zero reasons to try to short oil right now. And do you buy it? You know, always good to kind of wait for the market to come to you, have a new profile, let it be explored, try to maybe buy the bottom of the box on a 240 guiding up, but that's about it. You know, you shouldn't be chasing these things. And that's just the way oil bounces this morning. Let's take a look at the S&Ps. Now, this has been something, you know, we've talked about not trying to get in front of this thing right now. There really hadn't been a lot of reasons to step in front of the train. You got the Republicans into control. Trump's going to say some crazy things, but, you know, he's putting business-minded people seemingly on the cabinet here if they'll get approved, and that ain't bad for companies in general. Tax situations, the whole 9 yards. I know you guys know about the fundamentals there, but, you know, interesting action this morning. Let's just take a look on a 240 scale here. Reached a high already, 2264. So had the new, this is on a short term, ultra short term, by the way. New box attempting to appear, had this yellow bar. Here's the fair auction on the 240s down 2257 down into 2242. Those are the only two places in my mind that you can pick a battle here. The riskier trades to get short, but the good news is you can put stops above 2257. We might trade down into 2242, but that's where your next buy point is, by the way, 2242. All right. Going down the list here, let's just hit some of the usual suspects. Taking a look at gold, and we are looking at the February contract here. Talked about, you know, there haven't been a lot of reasons to try to get long this thing. There still aren't. There's not a lot of divergences going on in our gold contracts here. If you must, you know, try to step in and trade this thing, here's the 240s. There's probably a new profile that's going to happen here after we break them down. But again, I mean, I think that, the theme of this product still is sell the rallies and look for resistance areas to sell and let the market come to you to sell those and sell breakdowns. So you're selling resistance, selling breakdowns. Here's the weekly on the Feb contract. Talked about this thing spinning around down here and probably heading lower where you're getting that this morning. And again, you probably will have a new profile in the short-term 240s to try to sell against again pretty soon. But, again, that's kind of a wait and see situation. Here's and we're looking at continuous contracts on these treasuries and indices now. Talked about not trying to catch a bid on the treasuries at all. It's really simple to try to just continue to sell rallies. Steve Banger and I hinted at the possibility of a 50-point rate hike. The 10-year now is above 2.5% for the first time since October of 2014. And to me, it still seems at this stage with all the things going on, it still seems literally too low, that yield. So inversely, bonds and notes are too high. If they keep tanking this thing, as time goes on before this meeting, you could see actually it come into equilibrium with the 50-point rate hike. But again, that's still a possibility. I think there'll be a knee-jerk it leaks down if that happens. I think if we only get a quarter point, you'll probably get a pop in this. That's the logic. Let's take a look at I'm sorry, I'm mixed up here. Oh, let's take a look at the XLE. I'm sorry. That's what I wanted to hit next. And yes, somebody's asking about the Russell, and we'll definitely look at that in just a second. Here's the XLE. Had kind of been breaking out before this latest breakout on the crude contracts. This really has been just the relative strength trade of all times here. And this morning, you see we're up at 78.40. That's a real print up there. Not very liquid at this stage, but 78.40 literally is on a daily chart. It can't go any higher. It's off my charts. I'm just kidding. I had a guy who used to tell me that. It's at the top of my charts. Can't go any higher. Here's where crude's at right now, right up in this area right here. So these daily charts are only showing Friday's close. This is actually where we're at right now, right up in here. So pretty good gap up. Do you sell it? I think you got better things to sell out there that have been showing themselves weak. We've been talking about some of those stocks, by the way. Any of the XLE components haven't been any of those stocks we've been talking about on the short side. And why do I take that attitude? I just look at this scanner, try to use some custom sorts and manual sorts, and look at sectors in general to try to find out what's not cooperating with the broad market moves and what is cooperating. Try to take advantage of some anomalies and at least stay away from, at this stage, shorting things that are just wanting to go up with the market going up. So guys, we'll be right back and we'll hit the Russell immediately.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I apologize. Joey Jong's supposed to be on with us today. And I think John from Philadelphia was asking about that, to have that happen on Friday. And Joey's actually in Beijing giving a speech right now at a conference. Yeah, so we're going to try to grab him, but he's, might be all tuckered out from a long day in Beijing. And man, that place will beat you to death. I don't know if we ever talked about this, but it shocked me. I mean, just China is amazing. But there are 6 loops around that city. It's an awesome place. It's like my favorite town in China. But it's packed. I mean, every square inch of the highways circling those 6, loops around Beijing are so packed. They've had to. I think you can only drive on every other day with your license tag numbers. It is unbelievable traffic. Yeah, and Shenzhen, when I was there last week, man, they've got some smog issues there. Ooh, a lot of people, a lot of buildings going up. I mean, it's you start thinking, like, what have human beings done? I mean, it is unbelievable the amount of building that they're doing there. All right, so let's take a look at the Russell now that I put the dark gray clouds over the human race. Here we go. Exactly. So, Russell busted out here. This is our weekly. Let's talk about what's going to happen in the future, but I wanted to just kind of revisit what's going on here. There was one thing, too, before we get into the Russell, I wanted to make note of, and I think it was – let's go back and look at the oil contract for just a second. Let's see. Maybe it was some notes here. Nope. I know what it was. We're going to talk about the dollar in a second. There was something really notable that was going on with the dollar, but let's finish with the and let me save this page here before it reboots. All right, looking at the Russell, we're going to hit the dollar in a second. Here, here's the daily on the Russell. We've kind of got that outside day price action already happening relative to Friday, and those, and kind of opening up, going up high, sitting a little bit lower this morning with the futures. Here's the 240. We talked about the numbers on the S&Ps, and I guess the question is, are these things going to break? You know, we could have some people getting out, obviously, before this report, or excuse me, the FOMC situation, but it doesn't seem like the market's concerned about any type of a, uncalculated move, or the way they've calculated it, seemingly. So, again, I think, you have to look at the 240s on these indices right now, 1390 and 1372. Those are the big inflection points. We've kind of hit some this morning and backed off, but, we could easily explore 1372, 73 before we found a bounce point. I couldn't buy this thing up here just like the S&Ps. I'd have to have some kind of a pullback. And, we've given the numbers on the S&Ps for the pullback. Those are the numbers on the Russell. And if you're looking to really try to buy something that, might to some degree be on sale, you really want to wait for a daily profile to appear there and try to catch that stronger inflection point on the daily. It's really, the kind of the horses out of the barn with these indices right now. And the Exxon Mobils of the world, talking about some things that are heavy in indices. Some of these oil stocks, are going to move the index along based on some of the, oil prices that are going up. You've got Exxon Mobil trading past 90 now. We traded up at 89 Friday, and we had a breakout on Friday, had a weekly close above. So a lot of, some of these indices are going to have some oil-related little pops to it. Some people may think that might kind of balance the equation on some of the components internally of the indices and kind of keep a strong bid in them, and that may be the case. But I think shorting this thing now after a big massive breakout on some of these indices, I just don't think that's in the cards yet. I mean, you want to see some more cracks in the armor, technically speaking. And if I go into the scanner, I mean, we've talked about this. This is the S&P breadth situation. It's pretty long and strong. I mean, we're getting into that difference of almost 55, 60 in the breadth. This is our S&P daily breadth. And I think at some point, that extension is going to be a chance to play around with something. But, that's kind of that contra trade short situation. I apologize. And that's the riskier trade. So again, the trade still is buy the dip, and the breadths are still strong here. And here's our short-term 60-minute breadth, and that started turning over around December 1st. So it's really, there hadn't even been any short-term really reasons to start shorting this. And this morning it looks like we're setting up for the same argument. So. The gentleman out of the UK in the den had asked about this Russell trade. And, I just think you can't fight these things. The range trade's kind of over right now. And you just don't have anything to play defense against. So a lot of these indices are Katie bar the door still. All right. Let's take a look at copper. Okay. And as we look at copper, we finally had a weekly profile attempt to appear and then lock in. Here's where we're at on copper. The big, inflection points on copper, 2.49 down below and 2.7530 up top. But, if you're looking to trade this, I mean, I would be looking at trading this if, we obviously could stay within this daily profile here, but I'd be looking to trade this only playing defense against 2.6923 and above. Trade this down into 2.57. I think we've gone a long ways in a short amount of time here on copper. And I think this thing actually does deserve to visit the entire bottom of the profile here at 249. So you got a chance to play defense there. You've got an initial target at the bottom of that box on the dailies around 254. 255 is the POC, 257, excuse me, 255, 256 a POC on the weekly. So that's your first target, but I actually think we could pull back into the 249s on copper. All right, let's fish around a little bit at some other indices that you guys probably need to be aware of what's going on here with the Nikkei. I tell you what, let's hit the dollar first. Let's hit the yen, and then let's hit the Nikkei. I meant to go back to the dollar. You know, the dollar's doing exactly what I thought it would do. And the cool thing about the dollar is now you don't have this happen very often. You've got a profile appearing below price action on a weekly. That's extremely bullish in nature for the long-term trade. And as we look at, I know we kind of came off these unfair highs on the daily. We're going to talk about this a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show. We're going to take a look at the XLV really quick. Actually, we're going to finish with the dollar. Let me do that first. I'm all mixed up. Here we go. All right, so don't have this happen too often. Weekly profile appearing below price action. That's really, really bullish, as we stated before we went to the break. But this daily, here's the drill here. We're going to look at, obviously, the other side of top of the fair auction is somewhat of a target-rich environment here, but I think you have to be buying breakouts now above 101.88. You should have been taking some off there at the top, if not all, and waiting for that breakout. Now you're just kind of sitting there and hoping this thing spins around near 101.88, consolidate a little bit here, and then just next move up. Joey and I are pretty bullish on this still. There's that, again, you got to be looking at breakouts or support. There's some support. There's some support. There's targets. You got to buy breakouts or buy support on this thing. And that new weekly profile locking in today already below price action on the long term is ultra cool for long-term longs. And this thing can go a lot higher. What do you think about that? All right, here we go. Let's take a look at the XLV. This did the head fake of all times, but we found support 66.71. Got a breakout now above and closed above daily profiles here, which is kind of what I wanted to see. Now you're looking at, and I think this is a pretty good trade right here, 68.41, playing defense below that and letting this thing do its thing back up. And I know it hadn't been the strongest sector as the market's been going up, but I think you got a decent little, chance to play defense here. Wait for support to come in, or wait for the stock to come in to support, and that's kind of where the action is on that one. The XLF, how can you go wrong if they're widening the spreads? We've talked about this scenario before. Here's the 240s guiding this thing up from 20. No breakage, no reason to get out of this trade still. Trading up this morning, 23.83, even farther. Let's take let's take a couple of looks at a couple of stocks. How about that? Wells Fargo, all bets were off when everything started breaking out on the bank side. Bank of America, there's really JP Morgan. Let's take a look at this one. There's like nothing up here to play defense on. So we talked about that for a while. That's still the case. It continues to climb. No reason to get out of these bank stock trades right now. So if you've got these in your long-term portfolio, or this is Johnson & Johnson, kind of the really cool eternal short right now. There's 113.94. Just wanted to point that out. Still, that's a great place to enact another trade on J&J. But if you've got these banking stocks or peeking into the mutual funds that you may own, and just no reason to take them off. None. Zero. Let's take a look at Citigroup. Man, these are huge moves. Big cap situations. All right, let's take a look at RIG. Again, got some decent oil news out there. 1650 trading right now. And, here was the you had a really cool scenario here happen on RIG. 1062. These things have, doubled recently. I mean, these have just been killer trades. 1062, that weekly unfair high. There's 1062, the daily unfair high. We break above, and let's just kind of point this out. This is a cool little divergence going on here, too, before that pop. The scanner's going to give you these. It's going to give you that uptrend support, custom sort. You can do these yourself. But, that was a weekly unfair high, daily unfair high. That was just a really cool, powerful trade. And in a couple of weeks here, I'm sorry, daggone it. Had the wrong, somebody flipped my screen there. Let me get to the dailies here. Had a really cool situation on RIG develop. Okay, all right, so a couple other stocks here in the oil sector. Want to go into that. There's the energy. All right, so as you can see, there's really not a lot of red on this board here. So it's either gray and arrows up. And what does that mean? That means we're in defined uptrend for 50 straight days. Arrow up. Let me show you that on Baker Hughes. So as I go to this, even on the daily, even though we're within a profile here, what it's telling you is, okay, we're in a balanced area, but we're still kind of in the defined uptrend. Here's the weekly on Baker Hughes. I mean, that was, breakouts a long time ago on this one. But if we're trying to find anything in this sector to pick up on sale, I think you're still buying the strong of the strong here. Occidental, OXY, let's just take a peek at this one. If you got a short an oil stock, which I'm not recommending today, you got to take a look at, let's just see where Occidental is, pre-market. Well, let's take a look at it on E-signal really quick. OXY. All right, so we're trading 72.10 right now. Occidental Petroleum kind of been languishing a little bit. Hadn't been the strongest oil stock. That unfair low is 71.11, and where are we trading right now? 72.10. If you had to force me to short oil stock, I'd probably be looking at this one. But again, I don't think anything's in that category today. I think these things could actually lift even higher. But we've had a good run in these things, and trying to find some things that have kind of give out of gas a little bit early that might not be gapping up this morning might be a little bit of a short play on the short term. Just pointing that out. Okay, so I think we've got a caller from TFNN. John from Sarasota, you there?
Yes, I'm here.
How are you?
Pretty good. How about yourself, John?
Doing okay.
Good. I'm interested in currency pairs, U.S. dollar and Japanese yen.
Okay, let me pull that up. I got a little bit of an echo. Could you turn off your TFNN broadcast while you're on the phone?
A little bit of the short play on the
there.
Okay, great. I think everybody. Okay, so let's take a look at the yen trade here, and we're going to go to break in about 2 seconds. Can you stay through break?
I can. Thank you.
Great, awesome. So guys, we'll be right back, and we're going to hit this yen trade when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And, John, are you still there?
I am. Thank you.
Great. All right, let me pull up our currency grid here. Okay, I've got the yen up. So what's on your mind about the yen? Because I don't know if you've been watching the show, but Joey and I have been really long and strong on this without any reservations about taking it off yet. How are you looking at this, if you don't mind me asking?
Well, I'm looking for currency pairs. So if one's going up, the other one's going down. So if the yen is going up, who's going down?
Okay, you're looking at maybe an adverse reaction to play off of, considering that the yen's going up?
Yes.
Or that the yen's becoming devalued, I should say, I guess. Well, I think that something that's holding up remarkably well, that has actually shown some signs of life, and I wanted to see it really clear some of these earlier numbers. Sitting at around 74, 71 is kind of starting to edge up there and consolidate up into it, is the Australian dollar. One of the things about the Australian dollar that I really like is it really formed a good basing situation. It hasn't been a painful trade to try to play around with on the long side, and I like how it's really consolidated above 74.37 recently. So if you're looking at something that might give yourself a good pop, I mean, the U.S. dollar being relatively strong, I mean, I think it actually does have a chance to come back to some little bit lower support here, the U.S. dollar. But the Australian dollar, I think we deserve a pop up in the 76, if that tickles you at all. If you want me to continue, I will. I think the euro. I think this thing's destined. I've been talking about this. Had just a crazy week last week, but I think this thing, no matter what, is destined to go down below par. I just don't see it any other way. And I see the U.S. dollar skying, and actually really going out of control on the long side, up into like 106 and even higher. Joey was even talking about like 120 on the thing. So the euro, with that kind of mindset, I think the euro could easily see par and even lower. But that's something, the euro is not an easy instrument to trade, as you probably have maybe realized if you've been trying to trade it. It's a pain sometimes. So the way I trade the euro, and the way I actually took advantage of a really good move down when it finally did, is I traded it with options. And I did something simple, which was, short the currency, buy the calls, buy them in the money, so I wasn't paying up for the premiums and the insurance plan. And I kind of see this the same way. I just, it's going to shake a lot of people out of the trade along the way. But if you can hedge this thing, go fishing, get on the course a little bit, I'm telling you, man, it will make money.
Well, I'm currently with the Euro, EUO, which is 3 times short on the Euro, EURO.
Okay.
So I'm good in that, but I was looking at currency pairs, like for the Forex market.
Okay. Are you hedged on that EUO trade, or are you just kind of?
No, I just have options. Yeah.
Oh.
No. I buy it because it's the adverse to the Euro.
Right. But are you kind of naked that triple short, or are you kind of playing around with some mix of the currency versus that?
No,
okay.
I'm naked, but I want to find out how to get unnaked.
You always got to look at those things with, what's the leverage, what's the monetary kind of balanced equation when it comes to hedges. And something I used to do that I still do, even though with all the visibility that you have on some of these platforms like Thinkorswim and all the different things that it'll show you, I keep, and I don't know if Thinkorswim does this or not, but I keep an Excel spreadsheet with a DDE link that's linked into the platform itself to populate the Excel spreadsheet with live prices. You can, I'm sure Thinkorswim maybe has that DDE. They call it a DDE link, and it's called a dog echo. Yeah.
Okay.
And what I do, and I used to, literally, there was a lot of risk on the line when I was doing this, but I still keep, just an Excel spreadsheet and manually enter these trades and hedges and kind of option. I've allowed butterflies to turn into pterodactyls at times. I've said that a couple of times, but I try not to get really too sophisticated with, sophisticated option trades. I try to keep it very simple, and I keep this spreadsheet with all my option trades on it that are updating dynamically. And you can easily go into Excel and add up columns, summate things, and things like that. And I keep a running total, of how much leverage is devoted to the amount of money I've got in that particular options account. And I try to segregate accounts. A lot of these brokerage firms will let you have sub accounts, but I try to just keep that thing relatively balanced. So if I'm doing a debit spread on the S&Ps, and maybe I've got a credit spread on the bottom of the notes, things like that, I try to look at some relativity trades, and then how do those option spreads really, react when things are going my way, and maybe there's a chance to try to, trade the underlying against some of those spreads at times. But really I like to look at the total P&L percentage up or down on that spreadsheet as I've got it summated, and really try to keep the thing in balance, so to speak. So if the S&Ps, start making a lot of money with the spread, I'll come in and start maybe shorting 1 contract, 2 contract, if I'm long a debit spread against those S&Ps as it comes into a major target up top. But I'll put stops against those things because I don't have to really start dismantling the spread itself, and can trade the underlying against some of those spreads. A lot of times, John, even with the Euro trade, a lot of times you can put on non-directional option trades like straddles or strangles even, and kind of look at scalping some of the underlying against those spreads. So, and the worst case that's going to happen then is you're going to get kind of stopped out of the trade via shorting the underlying or going long the underlying. But go ahead.
No, go ahead. I'm just listening. Go ahead. It's a different approach.
Yeah, but I myself don't get as involved in the intraday noise as I used to. And I feel that some of the information that I show every day is really good long-term barometer stuff. And to not get shaken out of those long-term trades, I will go into the options market and try to mitigate the noise a little bit. So,
Okay.
but short the euro.
And that may roundabout answer my question, but I'm just thinking like the currency trades in the Forex market where you pick like the dollar to go up and the yen to go down, or vice versa.
Yeah, well, let me try to answer that when we come back, right? But if you got to leave, that's great. If you can stay, that you can keep chatting.
Okay, well, I'll leave, but you can talk about it. Okay. Appreciate the help, John.
Yeah, no problem. Thank you.
And enjoy the program. Thank you very much.
Thank you much. Thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. So we had John from Sarasota on with us earlier. I used to live in Sarasota. What a cool town. We were talking about currency pairs, and I'm just going to talk about the yen a little bit here, and what's the drill on this one. And we're getting up into that 116 and backing off. I think Joey had talked about a near-term top around 116 last time we were on, but this thing, ultimately, and here's the 240s. You're going to probably get a new 240 profile to kind of guide this up farther, and a new place to base support around to orient stops, of course, on the long side. I don't really think this thing's going to slow down. I think Joey ultimately was talking about a top of around 124, 125 on the yen trade. I mean, we have moved significantly. I don't have to tell you guys, we were talking about this area right here is the launching pad. And even earlier, we were talking about 100. I thought we'd actually do a little bit of a flush just to drive some people out of this long trade before then. But, really got confirmed when we started breaching and then retesting and went down pretty far that week, but reversed nicely above that 103.5. So is this trade over yet? I really don't think so. So is it time to short it? Absolutely not. Here's the British pound trade. Here's the long-term weekly on this one. We talked about this thing breaking above and coming back and retesting last week. That's exactly what it has happened. That was the strong trade, 125.09. We hit a low yesterday of 120, or last week 125.49, and this week already we've hit a low of 125.65. So it's defended that area pretty well. Looks like it wants to move north here. That's the area of playing defense, if you will, on the long side on the British pound. Let's do this. Let's take a look at the the Chinese currency here. CNY USD. We've talked about this one. Joey had talked about 6.97 being somewhat of a top, and then the government kind of stepping in and all that, but in some form or fashion. 6.74 up to 6.81. That's a new weekly profile that's come out now. This is very similar to the dollar. Weekly profile coming out below price action. It happened before. That's extremely bullish. So you got to look at this and try to find trigger points to get long this on down the line. So here's the support area now. Now you've got support a little bit higher, 6.8956 on the Chinese yuan currency. And, it's going to move higher. Technically, this is a pretty good setup when it comes to looking at this currency going higher, and the dollar's looking like it's going to get stronger. So kind of got some things jiving here. All right, we got about 45 seconds left. Let's hit something kind of important here. Let's take a look at the S&Ps one more time. Again, we talked about, is it time to short this? You got some oil stocks going to be strong today, some big oil stocks, big cap situations. Not any breadth situations changing. This is the weekly on the S&Ps. If you're thinking about shorting this, your only targets are 2.242 down below. These are all within the scanner, folks. You can catch all these really quick. You can just glide right across. There's those numbers we just spoke of right within the scanner. And the breadth situations are very strong still. So the contra trade is the weaker trade on this one. It's better to buy support on this particular product still. Guys, you've been great. Stay tuned for Larry. Have a good beginning of the week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.